Hey guys, Zoe here from OneGlanceTrader.com, and in today's video I'm going to be talking to you about divergence trading. So I've had a lot of feedback from everyone in either by email or on the channel or either through my survey, and a lot of people want to know more about divergence. So people that follow me in the work that I do, they will know that I do like using divergence. People say that divergence is a leading indicator. However, yes, I use it, but as with all indicators, it's not a holy grail. It doesn't work 100% of the time. So in today's video in particular, I'm going to be talking about regular divergence, and in the next video, I'll be talking about hidden divergence. So I'm on the Baby Pits website, so I thought it'd be a good place to start to talk about what regular divergence is, and then what I'll do is I'll head over to the charts, show you some examples or some textbook divergence. But what I also wanted to do was just show an example of where divergence doesn't work or doesn't work straight away. And the best way I would like to describe divergence is not a signal that price is going to reverse or continue based on regular and hidden divergence. It's more of an indication, early warning system, as some of you may have heard in my previous videos, that something may, and it's a high probability that something may happen. So from a regular divergence perspective, as you can see here, you've got two types: bullish divergence and bearish divergence. So divergence essentially means that there is a disagreement between price and an oscillator. So an oscillator could be a MACD, momentum, RSI, stochastics, whatever your favorite oscillator tries to be, and where there is a disagreement between them. So bullish divergence is where price is making lower lows, so it's in a downtrend, but the oscillator is making higher lows, so it's starting to trend upwards. Therefore, there is a disagreement and a strong indication that price will reverse at some point to the upside. How much it reverses and how long it reverses for is, not going to get into the detail of that in this video, but it's just giving you an early warning system that price may reverse to the upside. And bearish divergence, as you'll probably gather, is the complete opposite. So this is where price is making higher highs and the oscillators are making lower lows, and therefore it is a strong possibility that price will start reversing to the downside. So they've given you examples over here, but what I'm going to do is I'm going to head over to the charts and show you some examples that I've cherry picked out just to really show you, to really get the point of what divergence is. So we're now looking at a Euro USD 1 hour chart. So all the charts I'm going to show are the Euro USD 1 hour chart, just because I like to mix things up. For those who looked at my previous work, I look at everything from daily, 5 minutes, 15 minutes, to really kind of get the examples across to you and how you can use this to improve your trading. So this is an example of textbook bullish divergence. So as we saw previously on the Baby Pits website, price is making lower lows. So we're in a downtrend, as you can see here. And for sake of argument, I'll just ignore these arrows. These are my RSI MTF indicator, which I've got other videos on if you guys want to check that one out, but it's not relevant for this video as it stands. So, and I've also got, from an oscillator perspective, just to show you, I've got 4 oscillators. So the MACD, stochastic, RSI, momentum. And these are all at the standard default settings. I've not changed anything. So there's nothing whizzy going on with magic settings or anything. It's just the standard settings. So price is making lower lows. But what you can see here, during the same period on the MACD, the histogram is making higher lows. As you can see, the histogram is, decreasing, well, increasing rather, and making higher lows. Then if we go on to the stochastic, again, you can see from this point here to this point here, it's again making higher lows. You've got the RSI, this point to this point is making higher lows, and the momentum is also making higher lows there. And as you can see, as you go, price then reverses and starts going towards the upside. Now, the question is when is it going to reverse? Because I'll show you in a second about where you see loads of divergences, but price continues to go down and then it eventually reverses. So again, stop loss placement, entries, and all that good stuff in there, you need to take that into account. But for this video, it's just a basic video on examples of divergences. Another question I get a lot is, what is your favorite oscillator to use as a divergent signal? Now, for me personally, and again, it's a personal choice, I like to use momentum um, as a as my oscillator of choice, and but you can quite easily use the stochastics, MACD, or RSI. To be honest, it doesn't really make much difference. Another question I get is, it's showing as divergence on the momentum, but it doesn't show it on the RSI. So it's not always going to show it on every single one. This one here, fortunately, in the example I've picked out, it does show it on every single one, some element of divergence. However, it doesn't mean that if the MACD doesn't have divergence but the momentum does, therefore, oh no, price is going to reverse. It may reverse, it may not reverse. However, all I'm saying is the more oscillators that are the opposite of what price is saying, therefore the more likely it's going to reverse. So if it's just the momentum indicator and all the others aren't diverging, you may think as part of your trading strategy, okay, I won't take that trade because I need at least two or more oscillators to be diverging at the same time with price, but I don't get that complicated into it. I just use momentum. I do use other factors before I take the trade. So I wouldn't take the trade as soon as you see the divergence piece, which will probably be showing from this here to draw this kind of upward peak here to prove that this is a bullish divergence. I wouldn't enter straight here because for me personally that's too risky, because price could easily just start falling like that. Again, I'll go into more about entry rules in a different video, and if you guys want me to do an entry video for divergence, just put it in the comments below, and I'm more than happy to do that. So the next example is again some bearish divergence. Now again, ignore these numbers and these dots. These are again my price action indicator, which again you can download for free. Just click the link in the description or go to oneglancetrader.com to get that. But in this video again, we're talking about divergence. So as you can see, price is clearly making higher highs. But if you look at the MACD is making lower lows, lower highs, sorry. And again here, stochastic from this point to this point, lower lows, lower highs, sorry. RSI, lower highs, and momentum, lower highs. So there again is another textbook example, and as you can see, price then drops off, or sells off rather. And this is actually quite a good example to show using other factors to show that this divergence is actually going to take place. So you can see here that we've got this massive red bar with this massive red dot on top of it, and what this bar signifies is an engulfing bar, and an engulfing bar, well, a bearish engulfing bar, implying that price will go down. So as you can see, this bar, let me zoom in a little bit here, probably be easier to see. So this red candle engulfs 1, 2, 3, probably four candles. Not this fifth one because I can't actually see the high, but I assume that it goes above where that is. So it engulfs 4 candles, and it is the biggest candle in quite a long while, probably up to when this pin bar was formed here. So again, the bigger the engulfing bar, the more candles it engulfs, the stronger the signal. So we've got a divergence of price to drop, and then also a confirmation with an engulfing bar, therefore giving another indication that price has dropped. Therefore, the probability, and again, I don't say it's a guarantee, it's a probability, stacking the odds in your favor that price will go down. So I hope that makes sense. And that's an example of textbook bearish divergence. And lastly, very quickly, I'm going to give you an example of not so textbook divergence. So we can see here that price is making higher highs, and you can see that the MACD is not diverging. The Stochastics is about flat. I wouldn't say it's also making higher highs. It's about flat. The RSI, again, is flat. And also the momentum is also flat. So flat to slight decline. So as you can see there, you could argue that this is divergence because price is not going in the same way that the oscillator is. So flat is the same as basically going down effectively because it's not going up and it's not following it. And as you can see, the price then continues to trend. And then eventually it then sells off. So one thing you've got to bear in mind in divergence is that in a very strong trend, you can get lots and lots of divergences, but price does not reverse immediately. And that is something that you need to bear in mind. And price may never reverse back to what it is. So it may just continue trending, start consolidating for a little bit, and then drop again, or go in the way of the trend. So that's something to bear in mind when you trade divergence. And like I said, the key thing is about divergence is about using other factors to support divergence and waiting for a confirmation or using some sort of confirmation to get into the trade, which I'll go into in future videos. So I hope you've enjoyed that example of regular divergence. In the next video, I'll be talking about hidden divergence, which people say is more powerful than regular divergence. So until then, hope you have a good day, and I'll see you on the next video.